Well, investors shying away from commodities. This as the Federal Reserve is getting ready to hike short-term interest rates. All right, take a look at crude prices falling almost 17% over the past month. The sell-off also extends to gold, down about 6.3% during the same time. So what does this mean for investors? Marianne Bartels is the Chief Investment Officer of Portfolio Solutions at Merrill Lynch Wealth Management and joins me now on set. And Marianne, it's great to have you back. Welcome.
Oh, it's great to be back. Thank you.
All right, so what's driving this exodus out of commodities?
Well, China is a big reason why. I mean, this has been an economy that has been slowing down, and although the government has been taking steps to try to stimulate the economy, we're really not seeing enough. And without demand for commodities from China, there's weakness. You also mentioned that the Fed is looking to raise interest rates. We believe that the Fed will raise rates in September, and that's also not good for commodities, particularly gold, because gold doesn't have a yield, and as interest rates rise, other assets within the fixed income market become more attractive.
More attractive. And so with oil flirting at $50 a barrel, is it time to get into energy stocks, or do you see more downward pressure ahead?
Well, what's always good for energy stocks is when on a year-to-year basis, crude oil prices are rising, and obviously that's not happening. But right now, energy stocks we like from a valuation standpoint. We think the stocks are very inexpensive. We think analysts have overcut their earnings numbers because we're into earnings season. We're actually seeing some analysts actually begin to raise their numbers for energy. So we think it's a good entry point, but if you're looking to beat the market, it's going to probably take a while for some of these stocks to be able to beat the market because you're going to really need crude oil prices to rise. The pocket of energy that is working are the refining stocks. Those stocks are actually going up.
All right, and of course the major players in that space or in the oil space in general, we're talking ExxonMobil, Chevron, and then some of the refineries.
That would be the big integrateds. Then you also have energy equipment and services. Those are the two pockets that are taking longer to recover. And it's refining because we have excess supply. There's a lot of demand to refine, so those stocks are doing well. So two of the pockets under a lot of pressure, one pocket not so much. But if you're a long-term investor, especially if you're looking to grow your cash flow in your portfolio, we would take a look at the big integrated stocks.
All right, and do you see any benefit with the airlines in terms of low oil prices? I mean, they tend to lock in their prices ahead of time, but anything to say there?
They're not as correlated as they used to be with crude oil prices, but we're definitely seeing a difference. Some of the larger carriers aren't as trading as well as some of the smaller carriers, but always lower crude oil prices tends to help the airlines.
Yeah, we're seeing some of the big airline stocks up today. I want to switch gears and talk about the Volcker rule. Banks need to start complying today. Of course, it limits some proprietary trading. Give us your general outlook on banking stocks right now.
Well, it's a great time to talk about them because this is the week that a lot of the banks are reporting. And here's the good news. The earnings look good and the stocks are breaking out. And they're not just breaking out here. Even with all the turmoil over in Europe with Greece, the banks are trading well over there. And I've never seen a market go down sharply while bank stocks were breaking out. So I think it shows a very good sign for the economy and for the market in general.
All right, Marianne, we'll leave it there. Marianne Bartels, the Chief Investment Officer of Portfolio Solutions at Merrill Lynch Wealth Management. Thanks very much for coming in.
Thanks for having me.
I'm Scott Gamm, and you're watching The Street.